Welcome, everyone. Thank you so much for taking the time to join us for this information session this evening. My name is Brendan Thomas, and I'm the Chief Executive Officer here at AUSTRAC. And thank you again for taking the time to join us this evening. Before I start, I'd like to acknowledge that I'm coming to you from the lands of the Gadigal people here in Sydney. I have the great pleasure and opportunity to live and work in Sydney on Gadigal land and pay my respects to their elders and the spirit of this country. But this evening's presentation, we're going to talk to you about the upcoming changes to Australia's anti-money laundering and counter-terrorism financing regime and what those changes mean for you and for your businesses. So firstly, I'll give you a high-level overview of the changes and actually talk to you about money laundering and how it particularly affects the accounting profession. And when I'm done, Katie Miller, who you might see on the screen, who's the Deputy CEO here in charge of regulation, we'll then talk to you about the finer details of the reform and the practical applications of those reforms to your business. Now, throughout the course of the session this evening, we've got a Q&A function available. You might be able to see that on top of your screen. So if you've got questions as you go, please drop them into the Q&A function. And we've got a team there that will try and answer them as we go. Also, at the end of Katie's session, we'll have an opportunity to answer other questions that you might have and common questions that people in the accounting profession are asking us. So overall, we expect this session to last for an hour, so bring it to a close at around about 7 o'clock this evening. Also, this session will be recorded, and so if you want to watch it again or refer it to anybody else, it will be available on the AUSTRAC YouTube website tomorrow. So just a quick disclaimer before we start. It's important to note that the content of this evening's presentation doesn't constitute legal advice, and it won't go into every detail of the law or all of the situations that you might face in implementing the changes to the law. I really do encourage you to familiarise yourself with the rules and the guidance that you'll find on the AUSTRAC website. And if you need to get your own independent professional advice suitable for your business and for your own circumstances. So now to talk to you about money laundering. I want to talk about the scale of money laundering that we see and that we experience in Australia. You know, last year, our colleagues from the Australian Institute of Criminology released their most recent report on the costs of crime and organised crime to Australia, and it's quite significant. If we just look at one type of crime alone, that is drug dealing, we know through the work of them and through the good work of our colleagues at the Australian Criminal Intelligence Commission, that the Australian illicit drug market is worth at least $19 billion a year. So think about that for a second. That's $19 billion that's spent on drugs in Australia every single year. And every dollar of that $19 billion is illegal money. And all of it is being laundered each year through the Australian economy. And that's part of this serious and organised crime that's costing our nation upwards of $82 million a year. That's about 3.2% of our national GDP. And globally, the figure of illicit money going through the economy sits at around about $2 trillion. So of the money being laundered through the proceeds of crime in Australia, I just mentioned drugs are worth about $19 billion. Organised financial crime, that's the proceeds of scams and other kinds of taxation fraud, is worth at least another $13.2 billion. And the sale of other illicit commodities, you're probably familiar with the illicit tobacco challenge that we have in Australia. Those kinds of illicit commodities are worth another $8.6 billion. There's serious amounts of money being laundered through the Australian economy. And the aim of this regime is to try and inhibit that and prevent that money flowing through our economy. But this isn't just about serious and organised crime in Australia, but it shapes how Australia is viewed internationally. You know, if I can give you an example of the scale of money laundering that we see and that we deal with in AUSTRAC, I'll give you one example of an operation that was dismantled by the Australian Federal Police with strong AUSTRAC assistance. In this case, a criminal organisation operated as a criminal remittance and banking service, able to make sums of money available to clients almost anywhere in the world within 24 hours. This criminal organisation moved an estimated $10 billion over 4 years and had the capacity to move up to $1 million an hour. This organisation was so large it even set its own internal exchange rates. The organisation had a sophisticated informal value transfer system in place to make funds available overseas. And by exploiting digital currency trading, domestic and foreign shell companies, and multiple offshore bank accounts, this organisation effectively operated as an underground bank with global reach. But to be clear, the reforms of the Australian money laundering law aren't just about stopping Australian criminals laundering money. They're also about stopping international crime parking dirty money here. We can see it through the intelligence that we use in AUSTRAC, where illicit funds from overseas are used to purchase properties in Australia, pushing up property prices and taking property out of the hands of Australians and putting them into the hands of organised criminals who are just using them to further profit from their crime. And we see time and time again property purchases used to layer and integrate funds, and often using professional facilitators like real estate agents unknowingly to help them do that. But those professions like real estate agents and yourselves as accountants are in a unique position to spot this kind of suspicious activity and to report that activity to us. And these changes in the Australian money laundering laws that were introduced in 2024 aim to close these kinds of gaps, and in the process to protect your business from the criminals that seek to exploit it, and who at the moment we know about these gaps and are using them for their own benefit. If we're seen as a weak link internationally, we'll see more illicit funds from global crime networks come here, and we'll lose credibility with other countries and undermine the standing of our financial institutions. And this could have significant consequences for our country. It might mean other institutions being less likely to trade with us, or indeed increasing the cost of trading with us because of an increased perceived risk. But on top of that, we have international obligations to meet, and to make sure our standards are meeting global standards. So these anti-money laundering reforms aren't just about stopping Australian criminals, but they're about closing our markets to international crime and making sure that our economy is safe from that kind of exploitation. And this is where AUSTRAC comes in. So AUSTRAC, or our longer title, is the Australian Transaction Reports and Analysis Centre. We're Australia's anti-money laundering and counter-terrorism financing regulator. And throughout the presentation, you'll hear us shorten this to AML-CTF. But importantly, we're also Australia's financial intelligence unit. We use the information we get through the regulation that we do to work in close partnership with all of Australia's police forces, the AFP, state police, with anti-corruption bodies and other regulators to shut down criminal networks and strengthen our financial system against organised crime. But we regulate businesses to stop criminal abuse of our financial system and work with our other partners to stop serious crime. We help build resilience in the financial system, and we help provide the financial system and other systems with important intelligence about where they can strengthen their operations and further shut down crime. Right now at AUSTRAC, we regulate around about 19,000 businesses across sectors like finance, banking, and gambling. And the services these businesses provide are known high-risk services for money laundering. And under our law, they're known as designated services. But from the 1st of July this year, AUSTRAC's regulation will expand to around about 100,000 other businesses due to the reforms that were passed in 2024. So these new services and entities include services from lawyers, accountants, real estate agents, and dealers of precious metals and stones. Colloquially, we collectively call these Tranche 2 services. And from July, they'll come under our regulation. At AUSTRAC, one of the things we do is publish risk assessments on money laundering and terrorism financing. We do them per sector, but we also publish a national risk assessment. And in 2024, we published the Australian National Risk Assessment, and we identified accountants as posing a high and stable money laundering vulnerability, similar to what we see in other jurisdictions around the world. But they can be used as key facilitators by organised crime for money laundering, particularly during the layering and integration stages of the money laundering process. But criminal groups misuse the services of accountants to legitimise their illicit funds, to create and manage complex corporate and banking structures, to conceal beneficial ownership, often involving multiple facilitators across many jurisdictions. But key vulnerabilities include structuring and rapid movement of funds through complex company arrangements, the use of client and company trust accounts, and dealings that involve large volumes of cash. But risks are elevated where there's intensive, cash-intensive businesses, where there's complex cross-border transactions, and those that deal with high-risk clients. But accountants can also assist us in identifying and dealing with a number of predicate offences, such as tax evasion and fraud, and laundering the proceeds of those types of crimes as well. Accountants currently aren't regulated under the AML-CTF Act, but our national risk assessment did identify a significant vulnerability that we need to close to strengthen our assessment even further. Now, at AUSTRAC, we've developed a short video to help explain the changes that are coming to the AML-CTF Act and what they mean for you and your business. And I'll show you that video now.
Every day in Australia, billions of dollars move through our economy, from property settlements and business deals to the purchase of luxury items like gold, diamonds and other precious gems. While most of these transactions are legitimate, the unfortunate reality is that some are used to fund serious crimes like drug trafficking, human exploitation and weapons dealing. This happens through a process known as money laundering, where money gained illegally is moved through layers of transactions to hide where it comes from. That's where AUSTRAC comes in. AUSTRAC is Australia's financial intelligence unit and financial crime regulator. We work with law enforcement, government and industry to detect and disrupt criminal activity hidden within the financial system. Until now, anti-money laundering and counter-terrorism financing laws have mainly applied to businesses like banks, casinos, pubs and clubs, remittance service providers and digital currency exchanges. But that's changing. From the 1st of July 2026, more professionals, including real estate professionals, conveyancers, lawyers, accountants and jewellers, may have obligations under the law. These are all sectors that facilitate large transactions which criminals can exploit. Under the reforms, you may be required to assess the risk of how your services may be used to launder money. Know your customer's identity and verify the source of their funds. Maintain accurate records and report suspicious transactions to AUSTRAC. You're not in this alone. AUSTRAC will provide guidance, tools and training to help you meet your obligations with confidence. These changes are not just about ticking a box. They're about protecting your clients, your profession and the wider community. Together, we can stop crime where it hides.
As I mentioned earlier, the focus of Australia's AML legislation has been on the traditional finance industry, banks, financial remittance services, digital currency exchanges, and gambling businesses. But as those sectors have become stronger and criminals have become more innovative and shifted their practice, other risk areas are emerging. And other parts of Australian business and the financial sector might unwittingly be used by those criminals to facilitate money laundering and to benefit from their crime. And through the intelligence that we do get in AUSTRAC, we do see those professional enablers and facilitators being used often to help criminal groups launder money and profit from their crime. And the Australian government's identified those vulnerabilities, and the legislation that was passed in 2024, as we just heard, is bringing those additional sectors under money laundering regulation to make our system stronger and to make it harder for criminals to profit from their crime. But importantly, Australia is also part of a global network of countries fighting financial crime. And there's a global standard-setting body called the Financial Action Task Force, or the FATF for short. It was established under the G7 to set global rules and standards for how companies deal with illicit finance and financial crime. And that body has set 40 recommendations that countries are required to implement, and it enforces those standards by doing a process of mutual evaluations every 10 or so years on its member countries. And those evaluations focus on two things: on a country's technical compliance, that is, whether it has the right laws and institutions in place, and its effectiveness. So a country might have the right laws and institutions in place, but how effective are those laws and institutions in combating money laundering and terrorism financing? Now, Australia hasn't been compliant with all of those standards by not having these broader professional areas covered by anti-money laundering regulation. And in fact, Australia's been one of only 5 member countries that haven't covered this. Australia will be subject to that mutual evaluation quite soon, and the government's moving to make us more compliant with those global standards. So comparable jurisdictions like the United Kingdom and New Zealand have had this regime in place now for quite a number of years. So Australia's mutual evaluation will commence this year. And as I mentioned, it will have 2 elements. One about technical compliance, and the second one is about effectiveness. That mutual evaluation will commence this year and will conclude in 2027. And countries that get a poor standing in those global assessments really suffer significant consequences. For really bad assessments, countries get placed on what's called the FATF grey list. And for those countries, there's significant effects on that country's economy and its currency, its ability to borrow money, and its ability to attract foreign investment. So we need, as a country, to have strong laws and an effective AML-CTF system in place. But bringing the accounting profession under the AML control is a very practical move to help solve the crime that we do see through the intelligence that we gather in AUSTRAC. Accountants are often involved in critical points in the life cycle of a business, in creating legal arrangements, in shaping how entities are structured and how finance is managed and transferred. And accounting professionals have, I mentioned, long been recognised internationally as a risk area for criminals to exploit, a way to move money, to get greater levels of privacy, and to get a greater appearance of legitimacy of their transactions. Unlike many other methods of money laundering, shell companies can effectively hide beneficial ownership of transactions, and shell companies too can provide the cover of a reputable trading company that has been around for many years. Companies and trusts can also absorb very large amounts of money in a single transaction, making it a very fast and efficient way for criminals to clean proceeds of crime and move them through the financial system. But let me bring this to life with another case study based on the financial intelligence that we gather here at AUSTRAC. In this case study, an Australian accounting firm was engaged by clients who appeared to be legitimate property and investment operators. Their requests were routine: company setups, financial reports, and the preparation of tax returns. Nothing about the engagement or any individual transaction raised any kinds of suspicion. The accountant helped set up several companies and trusts, standard practices for this business. But what they couldn't see was that these structures were deliberately designed to obscure beneficial ownership and distance the true controllers from the movement of these illicit funds. Funds were moved through the entities and as consulting fees, intercompany loans, and business income. Each transaction looked as an ordinary commercial arrangement, but collectively they were used to layer and disguise criminal proceeds. Once processed, the funds were declared for tax, recorded as legitimate income, and reinvested into property and other assets. This completed the money laundering cycle, making the illicit money appearing lawful wealth. The accountant's role in this case was unwitting, relying on information provided by the client and standard professional practices. The scheme was only detected through a multi-agency investigation. By bringing together intelligence across agencies, investigators identified financial flows inconsistent with genuine business activity, common control across multiple entities, and patterns consistent with known money laundering methodologies. This case study demonstrates the importance of accounting professionals in recognising the risk in the sectors that you operate in. As accountants, you're gatekeepers to the financial system. And understanding how your services can be misused is vital, not just for clients, but for protecting them and protecting your practice from criminal exploitation. Now, over the last 12 months at AUSTRAC, our focus has really been on raising awareness and ensuring that businesses understand that these reforms are coming and what the expanded regime will look like and how that expanded regime might apply to those businesses. But now moving into the next phase, moving that conversation from awareness to preparation. So over the past 6 months, we've progressively released a number of really key and important materials. We've released new AML-CTF rules. We've released our core guidance documents. And at the end of January, really importantly, we published our program starter kits. And Katie will talk to you a little more about that later this evening. But taking together, these products move us from beyond just a high level awareness. They're practical tools that you can use to understand this regime and understand how it applies to your business and how it will operate in your own context. So our engagement is evolving, and we'll continue to work closely with industry and with industry associations and with their members so that you understand these reforms, but also to support practical readiness and have conversations with you about implementation. But it's really now time for businesses to begin engaging with these educational products and the materials that I've just talked about and starting to familiarise yourself with the guidance and those program starter kits. It's really an opportunity to really start to think about what an AML CTF program will look like for your business, to start to identify the kinds of risks that your business might be exposed to, and to understand your AML obligations and start to prepare your implementation programs. This is really where these concepts need to start to move from concepts to operational thinking and planning for implementation. So this coming year is a big year for all of us. It's a year of significant change and for transition. And for yourselves, it's about really building a strong basis for that kinds of compliance. But it's also a year that highlights the shared responsibility that we all have in fighting financial crime. And these reforms are really designed to strengthen Australia's financial system, to better protect our communities from organised crime, and to make sure that the structures and the frameworks that we have in place are really fit for purpose. At AUSTRAC, we're committed to working in partnership with you and with industry associations to really strongly support you through this period, to make sure that you've got the practical support that you need and to respond to the questions and the challenges that you might experience as those challenges arise. So I really strongly encourage you to take an active role in this transition. Familiarise yourself with those products that we have on our website. It's great that you're attending and participating in this forum this evening. Look for other workshops that we might run or that others might run through the course of the next few months. Stay informed and open a dialogue with us and with your professional associations. And together, working together, we can really make sure that we're prepared for this implementation and make sure we build strength and resilience in our financial sector. I'll now hand over to Katie Miller, who'll talk you through the new AML CTF regime in some more detail and talk about how the new changes will apply to your business. Over to you, Katie.
Thanks, Brendan. Good evening, everyone. My name's Katie Miller, and as Brendan said, I'm the Deputy CEO for Regulation here at AUSTRAC. That means I have strategic responsibility for AUSTRAC's regulatory, policy and legal functions. And as Brendan mentioned, I'm going to be talking about the changes to Australia's anti-money laundering laws and how they will affect you as accountants. I'll talk about your obligations, and I'll also say a few things about our expectations as a regulator. I'll also talk a little bit about some of the supports and resources that we've got to help you navigate these changes. And at the end, we will have some time for questions. So the Q&A function is open and our team is on hand to answer questions and connect you with some of those resources if we can. So let's get started with the first question, which is really who is going to be regulated. Now, the first point that I want to make is that the AML-CTF Act does not regulate sectors. Rather, it regulates people who provide certain types of services, which are called designated services. And designated services are basically those services that have been recognised globally as being at higher risk of being abused by criminals to launder money. And some of the designated services that are regulated by the Act are commonly provided by accountants. So from 1 July this year, if you provide one of these designated services, you will be regulated by AUSTRAC and you'll have a number of core obligations under both the AML-CTF Act and the rules. Now, if you want to get the full list of designated services, they are in a table at section 6 of the AML-CTF Amendment Act. My suggestion, though, is rather than try and wade through the Act, have a look at our Check If You May Be Regulated tool, which we've developed to try and provide you with more of a Q&A tool that can help you decide if you are going to be regulated. Some examples of some of the designated services that you might be providing. So if you receive, hold or control a person's property as part of assisting in the planning or execution of a transaction, you're providing a designated service. And that includes if you have authority over a customer's bank account and you make payments on their behalf. You'll also be providing a designated service if you assist a person in the planning or execution of any of the following for a body corporate or legal arrangement. So a transaction to buy, sell or transfer that body corporate or arrangement, its creation or restructure, or arranging equity or debt financing. Just a note on the question of assisting. We have in our core guidance provided a little bit more guidance around what assisting involves. We distinguish between advice that tells a person, look, this would be a good idea if you set up a company or, arrange some debt financing. That is not considered to be a designated service. It's really only when you get into the mechanics of actually helping somebody bring that to fruition. So that would be things like preparing or reviewing contracts or taking the necessary steps to convert, a partnership into a company. You're also providing a designated service if you act as, or if you arrange for another person to act as a director or secretary of a company, a power of attorney of a body corporate or legal arrangement, a partner in a partnership, a trustee in an express trust, or any other position that is functionally equivalent. And the reason that those sorts of services are regulated is because one of the things that money launderers are attracted to is anonymity. And so one of the ways that they do hide who ultimately owns or controls money or items of value is to create multiple layers and to put, different people who are not the beneficial owners in those sorts of roles of, secretary and director. The two other things I want to make clear about the designated services, they're services that are really about two things. One will be about the transfer of value. That is ultimately what money launderers want to do, is they want to transfer value from illegitimate into legitimate means. And the other piece is around anonymity. And a lot of the designated services relevant to the accounting profession are those services that we know enable the money launderers not just to transfer their value, but also hide and obscure where that money is coming from. Designated services will tend to have a start and end point, and your obligations apply while you're providing the designated service. So some of those services will have clear endpoints and might be of short duration. So for example, the act of setting up or restructuring a corporate structure will have a clear beginning and end point and be of shorter duration. Whereas if you are acting in one of those roles of like director or secretary of a company, that might have a longer duration. Turning now to your obligations. So if you're providing one of the designated services, then from 1 July of this year, you will need to comply with certain obligations. And those obligations are really directed at helping you to identify, mitigate and manage the risk that criminals may try to use your services to launder or hide their money. So the key obligations that you will have, the first is that you need to enrol within 28 days after you provide a designated service or within 28 days of 1 July. And basically the act of enrolment is really just letting us know that you exist and you provide and which designated services you provide. The next thing you will need to do is develop and maintain an AML CTF program that is tailored to your business. Now that program needs to start with a risk assessment. That is key to all of this sort of management of money laundering risk, is actually an assessment that identifies the money laundering, terrorism financing and proliferation financing risk that your business may face and making an assessment about those risks. So are they high, medium or low risks? And then your program also needs to have policies and procedures that basically say how your business will mitigate and manage the risks that you've identified. And those policies also need to address how you will meet your obligations under the Act, and they need to be appropriate to the nature, size and complexity of your business. The next thing you'll need to do is to appoint an AML CTF compliance officer. They will be responsible for overseeing and coordinating the day-to-day compliance with the AML CTF Act and rules and the policies that your business has developed. Now, depending on the size of your business, the AML compliance officer may be solely focused on AML, or they may have other duties in addition to AML. Whoever your compliance officer is, they must be considered a fit and proper person at the management level. Now, if that person is an accountant, then they can rely on the fit and proper person test that is part of accountancy standards, with some additional considerations which are relevant to the person's AML CTF knowledge and capability. Now, that does not mean that they need to be an AML CTF expert, but they will need to have done some training. And you can find the considerations for what makes somebody a fit and proper person in the AML CTF rules, as well as our core guidance. The next thing you will need to do is to conduct initial and ongoing customer due diligence, and that's really about knowing your customer. It means knowing and verifying your customer's identity, so who are they and the fact that they are different to other people. And also understanding the nature of your business relationships with them. So effectively, why are they seeking these designated services from you? Now, for a lot of you, you will already be doing things that help you to know who your customers are. And so we expect that you will be able to leverage a lot of that for the AML purposes. And for some of you, it may be that you're doing a lot of what you already need to do, and it's just about formalising that within your program. Customer due diligence helps you to understand who your customers are and the money laundering and terrorism financing risks that they may bring to your business. And the level of information that you need to collect and verify to complete customer due diligence is going to depend on the risk profile of the customer. So as I flagged before, you need to establish whether the customer or any agent of a customer is who they claim to be, if they've been subject to targeted financial sanctions, and if they are a politically exposed person or a relative or close associate of one, such as a government official. Now, it's important to remember that the Act adopts a risk-based approach, and that means that the level of due diligence you do over your customer will depend on the level of risk they pose. For a lot of you, your customers may be low risk. And that means that you can apply less stringent due diligence, which is known as simplified due diligence. An example of a low-risk customer would be somebody, would say be an individual, they're an Australian resident, they run a business, and they need help setting up a private company as where they are going to be the sole director and shareholder. In that instance, it's very clear why they're setting up the business, and it's very clear who has ownership and control of the business. And so those customers will require lighter checks. In many cases, it'll be enough to gather some basic information from them, check their driver's license against that information, and do a couple of internet searches to see if they're subject to those international sanctions or if they're a politically exposed person. Now, the reason you need to do that, even for low-risk people, is because one of the things that organised crime really like to do is hide behind people who look to be otherwise fine, upstanding members of the community. So low risk doesn't mean no risk. Doing this initial customer due diligence, you need to do this before you provide a designated service. In most cases, that's the sort of general rule. There are a few exceptions in the Act where you can conduct customer due diligence after providing the designated service, and that's known as delayed customer due diligence. And it usually applies where completing that initial customer due diligence would disrupt the ordinary course of business. Now, you don't need to perform customer due diligence on existing customers that you're providing services to now and continue to provide services to after the 1st of July. That will only change if you get to a point where you need to submit, you find that you need to submit a suspicious matter report about them. At that point in time, you will need to do some customer due diligence. Or if there's a significant change in the relationship that increases their risk to medium or high over the course of your business relationship with them. The next thing you'll need to do is submit reports to AUSTRAC. There are a few reports that you might find that you'll need to submit. The first that I'll talk about is suspicious matter reports. Now, that basically does what it says on the label. You file this sort of report when you suspect on reasonable grounds that there's a suspicious matter. So that could be that the person is not who they claim to be, or it could be that it's a matter that's linked to criminal activity or proceeds of crime. Now, one of the things that we get asked about with suspicious matter reports is whether they are like, making a report to police. So calling up the police and reporting a crime. I want to make it very clear that they are very different things. Yes, they're both connected, to potential criminal activity, but a suspicious matter report is much more targeted at a smaller sort of report. You're basically just reporting that you've seen something suspicious, something that doesn't look right. Those suspicious matter reports, they are accessible by law enforcement. So police agencies do have access to all of those suspicious matter reports, but it's not like a one-to-one process where as soon as you make that report, it goes to the relevant police agency and they look it up and use that to investigate straight away. That's not how financial intelligence works. Financial intelligence is much more around, putting lots of different reports and data sets together and building that overall picture of where criminal activity is occurring. The next sort of report that you'll need to submit is a threshold transaction report. So that's for individual cash transactions that are valued at least 10,000 Australian dollars or a foreign currency equivalent. And then the last type of report is an annual compliance report, which summarises, basically provides AUSTRAC with information about how you have met your AML-CTF obligations in the previous year. And as will be familiar to most of you, there is also an obligation to make and maintain accurate and complete records for at least 7 years. And those records provide evidence of your due diligence, your customer due diligence, your risk management practices, and how you are complying with your obligations under the Act and rules. Now, if you want more information about these obligations, you could, of course, read the legislation, but we understand that that is not how everybody sort of necessarily absorbs information well. They can be a little bit cumbersome. And so what we've done is produced a plain language version of the obligations in our core guidance. That guidance also provides it provides AUSTRAC's positions on a number of issues, such as our interpretation of certain provisions in the legislation, as well as our expectations about what we expect to see if you are meeting those obligations. Our core guidance is available on our public website, and it is designed to be a central reference point for you as you consider your obligations and how to meet them. It's intended to be practical and to provide accessible insights into how we interpret the obligations and what we expect of you. Some of the topics that you can find in there include more detail on AML-CTF programs, including our expectations on risk assessments, program structure, assurance processes, and record keeping. Customer due diligence, including applying a risk-based approach and guidance on beneficial ownership and ongoing monitoring. And then there's also content in there about governance and oversight, so strengthen requirements for visibility of your governing body, senior management accountability, and clearly defined roles and reporting lines. The core guidance, it's a great resource, but it is not designed to be read cover to cover. It's a reference tool, and I encourage that you access it as you need it, as you've got questions, and it's really good as a resource to sort of dip in and out of. The next resource I'll talk about is our program starter kits. Now, you'll recall that one of the obligations that regulated businesses have is to have an AML-CTF program. In late January, we released program starter kits to help typical small businesses in the newly regulated sectors build an AML-CTF program so they can meet that obligation. Now, this is a world first. It's the first time that a regulator has actually stepped into the shoes of a regulated business and actually turned their mind to what you would need to do and what you would need to document. And this kit set out a practical step-by-step actions that you can take to build your own program. It's not just a template, it's actually a product that you need to customise to reflect the nature of your business. And the kit includes a guide for how you do that customisation. And really the main reason that we have developed this resource is to help the new businesses reduce the time, cost and effort involved in developing an AML-CTF program. So you can instead focus your efforts on actually applying the program and the controls in it to make it harder for money launderers to access your business. Now, there is information in the kits about the intended users of the kits. So they do have an intended user group. The sort of features or sort of criteria indicators of somebody who would be suitable to use the starter kit would be an accounting practice that only provides designated services that are professional services, has 15 or fewer personnel working for the practice, so that includes all your personnel, so administrative staff as well as accountants. You're an accounting practice. Doesn't necessarily require membership of one of the professional bodies, but obviously that's clear evidence that you are an accounting practice. And that you most commonly deal with individual clients who are Australian residents or with clients who are body corporates, legal arrangements. And it's less common for you to deal with body corporates, legal arrangements or overseas residents. There are a few factors that if you have these factors, then it probably means that you are not one of the intended users for the program starter kit. So if you regularly deal with high-risk clients, you assist with the purchase or transfer or sale of overseas property, you have fully remote self-service options that mean your clients don't need to actually interact with your personnel. You're involved in acquiring all or part of another practice or transferring clients from another practice, or if you're part of a larger reporting group, foreign branch or subsidiary. If you've got any of those factors, then you're certainly welcome to look at the program starter kits and use it for sort of information and inspiration about what a program should look like, but you're not one of the intended users of the program starter kits itself. So if you're in that latter category, or if you're sort of bigger than the 15 employees, feel free to have a look at it, but you are ultimately still going to be responsible for assessing which materials might be appropriate for your circumstances and identifying how to address your specific money laundering and terrorism financing risks. The reason that we have put those limits around it is that the larger and more complex you get, you're faced with different and more complex money laundering risks, and they might require stronger or additional controls, as well as different due diligence processes and policies. So again, some of the practical examples and guidance in the kits, they might provide context for understanding, but they're not tailored specifically to the management of some of those more complex risks. When you actually go to have a look at the kits, they contain a number of different documents. So I've already mentioned there's a customised guide that you can use to actually work through and build your own program. Each of the programs built will have a risk assessment. There's a policy document which sets out what your business does about the money laundering risks that it faces. There's a process document which actually steps through the actual process, the questions to ask a client and what to do with that information when you've got it, as well as a raft of tools, a raft of forms. So you can actually pick up these forms and implement them into your customer onboarding processes so that you are collecting the information that you need to assess the risk that your client might face and gather the necessary information. The last thing I'll say about the program starter kits, I did say at the beginning that they were a world first. Can I say it wasn't just AUSTRAC's effort alone? The only way that we were able to develop these kits is through close collaboration with peak professional bodies and small businesses across the newly regulated sectors. We gained some really fantastic, insightful information about what a typical business looks like and the sorts of risks that you face. So if you were one of the businesses that was involved in that process, I thank you very much. Moving then to our expectations as a regulator. So the first thing I want to say is that we understand that any new regulatory regime is going to be a lot to get your head across. It can be overwhelming, it can be confronting. I think that is compounded when you're talking about an area like money laundering, because let's face it, if you're a law-abiding person, you don't sit there all day wondering about how you could hide dirty money from people. So we understand that there's a lot of information to get across here. Last year in July, Brendan, as CEO, released a statement on AUSTRAC's regulatory expectations for the implementation of the reforms to make it clear what we expect and where we want you to focus your efforts. And basically, we do not expect perfection on day one, but we do expect to see effort. So if you are an accountant that is going to be regulated from 1 July, what we expect you to do is we expect you to be enrolled. Enrolment opens on the 31st of March and you have until 1 July to enrol. We expect you to have an AML CTF program, either because you've built one from the program starter kit or you've developed one yourself, possibly with professional assistance. That you will have an AML CTF compliance officer, that you will have trained your staff on your program, and that you will be ready to engage with clients and report suspicious matters. You won't be perfect at this on day one. Understanding and identifying money laundering risk, it is a practice, it takes time, but we do expect to see honest efforts. The support that we have been providing to regulated businesses, or soon to be regulated businesses, in terms of guidance materials, education, industry forums, that will continue beyond 1 July. We know that as you start to work through your program starter kits or building your program, as you attend more of the education sessions, we understand that you will have questions. We've had some great questions tonight. Some of those questions we will have answers for, and where we have an answer for it, we will connect you to the right resource, whether it be the guidance, the program starter kits, or some education. There will be some issues on which we don't yet have a position. With any piece of legislation, there's lots of issues, some of which only sort of become live when you actually start using the legislation. So we recognise that there will be some things that we will need to turn our mind to at a future date. In the meantime, if we can't give you a position, what we expect you to do is for you to turn your own mind to the question and develop your own position. Now, in doing so, you might wish to seek external professional advice. We expect that you will document that position and why you consider it a reasonable position to adopt. And then we expect you to retain records of that position and any advice that has informed your position. So this is basically the timeline of where we're at with the reform. So there's been a lot of work in the last sort of 12 months. So we finalised the AML-CTF rules in August last year. Our core guidance was published in October. As I said, late January, we published the program starter kits. From the 31st of March, you will be able to enrol as a regulated entity, and your obligations will commence on the 1st of July. And throughout 2026, we will continue, as I said, with our awareness and education campaigns. In terms of the guidance and education that we've got available, so I've talked a bit about the core guidance and the program starter kits. We have also published guidance on the money laundering and terrorism financing risks that apply to certain sectors. We also have published a range of education materials such as e-learning modules, fact sheets, checklists, and other digital resources such as webinars. And they've really been designed so that you can grasp the basics of what you need to do, and then the guidance resources provide that extra detail. In terms of webinars, last year we launched an AML-CTF Essential Webinar Series, and that provides general education and introductory information. There are 4 webinars: what AUSTRAC is, AML-CTF obligations, a webinar on money laundering, terrorism financing and proliferation financing risks, and then a webinar on outsourcing AML-CTF functions. So they're really good introductions if you are new to AML. They're on our YouTube channel. They're also a really good resource when it comes to training your staff. And we are going to release further webinars, so keep an eye out for topics such as how to use the program starter kits, customer due diligence requirements, and risk assessments. As Brendan said, the time for preparing is now. So in terms of what you can be doing to prepare, the first thing is check if you are going to be providing a designated service. So as I said, we've got the Check If You'll Be Regulated tool on our website, and that can provide you with a view on that. As I said, if there's a lot, I know that each business will have a range of services that you provide. If the Check If You'll Be Regulated tool does not give you a specific answer for a specific service, I think that's where we're in the space of turn your own mind to it, seek advice if you like, but it's important for you to form a view and document why you think that's a reasonable view. The purpose of that is that if we do form a position later down the track, and it's different to yours, we'll just want to have a conversation with you about that. Now, if you do provide designated services, then you should begin to develop an understanding of the money laundering and terrorism financing risks that your business might be exposed to. So that means having a think about, well, what are the type of clients that you deal with, what are the types of products and services you offer, and how do transactions and financial information flow through your business. And that'll help you to, that'll help inform the sort of systems, controls or processes you might need to put in place. You then need to really get into the understanding of your new AML-CTF obligations. Obviously, attending tonight is an support and assistance of that. But otherwise, I think have a look at the core guidance and the program starter kits to get that sense of your obligations. You then need to develop your program. So if you are eligible, strongly encourage you to use the program starter kits. And then otherwise, please keep engaging with our guidance tools and education, including our online tools and our webinars. We'll turn now to questions, but before, and can I just say, before I pass the mic back to Brendan, to just thank you everyone for attending this session and for taking the time to engage with us this evening. We really do appreciate your willingness to listen, participate and be part of this important conversation. So Brendan, I understand that we have had a number of questions come through. I will turn to you to start firing the questions away.
Yeah, so one of the common questions people are asking, Katie, is auditing considered a designated service? You want to answer that one?
Sorry, is what considered a designated service?
Auditing.
Auditing. So I will. So can I say I will offer an opinion now, but I will also get our internal team to confirm this, just in case I don't get it exactly right. So as I said, the designated services are really about that transfer of value and about services that can hide who the owner of assets is. As a result, that doesn't cover things like audit. Audit functions are really about going in and checking whether somebody is complying with accounting standards, so they are not as exposed to risks around, hiding money. Having said that, audit is one of those really important functions, I think, that can throw up that something might not be right. So even though it's not a designated service, it might be something that generates a suspicion that you then need to report to us.
Thanks, Katie. There's a question about, does every accountant need to enrol? I think it's important to say enrolment is about a business enrolling with us, not individual accountants enrolling. So the enrolment is really about getting on and telling us details about your business, the services you provide, and some other information about your business. So it's not every accountant that needs to enrol, it is the business itself that is enrolling. Another question is, how does the regime work for in-house accountants? I think that's the same answer as the last one. This is for a business to enrol with us and about the business providing designated services. So if the business that in-house accountant works for provides designated services, obviously the business will need to enrol. If it doesn't, then no. There's a question about what's the overall outcomes that AUSTRAC expects from these reforms. Katie, do you want to have a shot at that one first?
Sure. So the main outcome that we expect is to make it harder for organised criminals to launder money. That's what we're really focused on, is trying to drive down the opportunity for criminals to engage in financial crime. So if businesses are doing the sorts of things that we've talked about tonight, have a program, they're asking clients questions, they're reporting suspicions, that is all making it harder for organised criminals to hide their money and to benefit from their money.
Thanks, Katie. We're hoping to strengthen the financial system even further by bringing accountants into this regime. We've certainly seen it in the areas that we've worked to date, the banking sector, the finance sector, the gambling sector, where people are making it practically harder for criminals to launder money and profit from their crime. This isn't just about reporting, it's about identifying those suspicious behaviours and acting on those suspicious behaviours, knowing who your customer is, knowing why people are doing business with you. And if you do continue to have that level of suspicion, reporting that suspicion to us.
Yeah, and maybe one thing else that I'll clarify, Brendan, is that we don't expect people to stop all money laundering. Money laundering, like crime, we want to try and reduce it as much as possible, but we recognise that we will probably never reach that nirvana of getting rid of it completely. So it really is about increasing the cost of money laundering for money launderers and increasing the risk that they will be detected.
It's really important for people to know that the nature of the challenge that we're dealing with. I highlighted that a little bit earlier, but in Australia and around the world, we have criminal organisations that just exist to launder money. That's all they do. They get subcontracts from other criminal groups. They buy cash from drug dealers. All they do is launder money. That's all they do for a living. They're very, very good at it. They're highly organised. They're really professional. They're connected internationally. So there's a couple of things we expect to happen. We expect people to continue to try and launder money. we expect some of those people to get away with laundering money. But the whole purpose of this regime, extending to yourselves, to real estate agents, to lawyers, and to jewelers, is to give us greater insight onto that criminal behaviour, to shut down further avenues from criminals being able to profit from their crime, and to help fill in that intelligence picture so that we can both strengthen our financial system, but also break down organised crime and organised crime networks that we're confronting. They really are large and significantly professional. There's quite a number of questions about the costs of regulation, particularly on small business, and the burdens of duplication. Katie outlined some of the work that we've done. The program starter kits are a really strong effort on our behalf and on behalf of the professional associations to give as much detailed guidance as we possibly can, particularly to small businesses, to make it easier for you to understand what's required under this legislative regime, and also to get yourselves ready to be able to comply with that. As Katie said, nobody else in the world has done this, and we've really spent a lot of time and effort trying to understand the challenges that small businesses face, and particularly in the accounting sector, how your businesses work and the kinds of risks that you might be exposed to. But Katie, you want to talk also about the nature of the cost and how we're trying to limit that experience?
Yeah, so I think that the program starter kits are a big piece of it, because that means that you don't have to either spend your own time getting across the legislation and sort of what risks look like in your sector, you know, from a first principle sort of basis, and instead you can put all of your effort into training your staff and then actually applying these policies and processes. The other way that we're really looking to reduce the cost is to be as clear as possible about what we expect to see. We recognise that even though this is new for the accounting sector, money laundering and the controls that are effective with money laundering are not new. We already know a lot from the businesses we regulate at the moment, and we also know some things from international jurisdictions where they're already regulating accountants. So wherever possible, we want to provide you with that information, and set you up to succeed in managing your money laundering risks, and sort of wherever possible we will share that information with you.
Yeah, it's important to know that this is really a partnership, and we're working with you and your industry together to implement these reforms. As a regulator, our objective is to shut down criminal opportunity. It's not to nitpick people over kind of regulatory compliance issues. One of the things we don't do in AUSTRAC is pick on small businesses that are doing their best to try and comply with the law. It's really important to understand that we do take that approach of trying to work with business and industry to understand what the risks are and what works to shut out financial crime. There's a couple of questions here about suspicious matter reports. So what happens when someone submits a suspicious matter report? And importantly, the question that comes up a lot is, will that person know that you're the person that submitted that suspicious matter report about them? It's a really important question, and that comes up in a lot of industries that we talk to, particularly with sole practitioners that are worried about a person they've dealt with who knows them personally, might know where their office is, and indeed, if they're working from home, might know where that person lives. A legitimate concern for people to have. It's a really important thing to understand. There are very strong legal protections around suspicious matter reports. It's an offence to let somebody know that a suspicious matter report has been submitted. We control those reports when they come into AUSTRAC, and we spend a lot of time and effort making sure that that data and information is protected appropriately and properly. And as Katie spoke earlier, a suspicious matter report isn't like a report to police. It's not like giving evidence in a court. It is reporting something unusual and something suspicious. So it won't be used in a court proceeding. It'll never appear in a court bundle. It'll never turn up in evidence that a defendant gets in a criminal prosecution. There are a whole range of protections around how we take in those suspicious matter reports, and then how they're used by us and by our law enforcement partners to make sure that the people that are subject to those reports never find out that they've been written, and indeed who's written them. And I don't think, Katie, in the 20 odd years that we've been regulating this industry, we've had an instance of where that's actually been a problem, where someone's known that a suspicious matter report's been issued against them and action been taken. Certainly not one that I'm aware of. We take a lot of effort and a lot of care to make sure that information is very strongly protected. Now, I did promise you that we'd bring this to a close at 7 o'clock, and we're almost just about there. I really want to thank everybody for taking the time to join this discussion with us this evening. I did see there was a number of questions in the chat from people who couldn't log on earlier and joined us a little later about whether this presentation will be recorded. Yes, it will be. And it will be broadcast on our YouTube channel from tomorrow. There's a couple of things I'd really strongly encourage you to do, though, in the meantime. One is jump on our website and have a look at all the tools and material that are on there, and particularly have a look at whether you will be regulated. As Katie mentioned, we've got that check if you may be regulated tool. It's a great tool for you to be able to use. It's pretty simple and intuitive and straightforward. Ask you a bunch of questions about the kinds of services that you provide, and we'll be able to give you some good indication about whether you fall within this regime. Secondly, go on our website and have a look at our reform page. We've got a whole range of materials on there dedicated to this reform and about informing you about how this reform operates and what your obligations are under this reform. And you can learn about our obligations more by looking at those obligations under the Tranche 2 entities. Have a look at those starter programs and our guidance as they appear on our website. As I've just mentioned, this presentation will be available on the AUSTRAC YouTube channel from tomorrow. So you can access that by jumping on YouTube and just searching for AUSTRAC, and you'll come across our AUSTRAC YouTube channel, where you'll be able to rewatch this presentation and also see any of the other material that we do have on our YouTube channel. And please keep paying attention to our website. We've got a whole range of resources yet to come to help inform you about these upcoming reforms and how they affect you, and hopefully to assist you to understand how best to be able to comply with those. So keep in touch with us via our website and keep watching us on that YouTube channel. You can also subscribe to AUSTRAC's In Brief, and in a minute we're going to have the In Brief on our screen so that you can see what that is. You can see the QR code there now. If you can't do it now, maybe go on the website and have a look about how you might be able to sign up for that newsletter. It's a regular newsletter that we talk about the activity that we're doing, as well as upcoming issues that you might want to pay attention to. So please jump on and subscribe to that newsletter. And you can also follow us on a range of social media sites, and we're constantly posting news and updates on those sites. So join us on LinkedIn in particular. We've got a great feed updating people on LinkedIn on changes to AML and the actions that we take. Again, thank you so much for taking the time to join us this evening. We really are on this reform journey together, and we look forward to working with you in the coming years. Thank you again, and have a good evening.